I started in commercial lending. I was lending to small and medium-sized businesses using the asset-based model. It was difficult to build a large portfolio, but we went into mortgage lending, focusing specifically on builders and developers. Okay, so I read not too long ago that the pilots got a 30% increase, 10% over 3 years. We just need to have this constant inflation. It's something that I guess a capitalist economy requires. And if they don't pay it back, you got to chase them around. The biggest companies, Cadillac Fairview and Tridel, they go to the banks, but anybody below that can come to us, even if it's tens of millions of dollars that are involved. We operate at our company 2 mortgage income funds. So the idea is we're doing the work. We've been able to provide a product or service to our builder developer community and the small businesses that we've worked with in the past at a price that works for them.
Our guest today brings decades of expertise into this specialized sector. Hi, everyone, and welcome to the CanadianSME Small Business Podcast, where we explore the strategic insights and financial pathways that empower Canadian entrepreneurs to build and grow their ventures. Now, today we're diving into the critical worlds of real estate and mortgage investing, focusing on a specialized lending that serves a unique market. Now, in a dynamic economic landscape, understanding the nuances of the real estate market and finding alternative investment vehicles is crucial for builders, for developers, and investors alike. Our guest today brings decades of expertise into this specialized sector. Joining us today is David Morrison, the president and CEO of Morrison Financial Services Limited. After beginning his career as a lawyer, David founded Morrison Financial in 1987 and has since grown it into a boutique financial services company through specialized lending to real estate builders and developers. David is also an active member of the Ontario Securities Commission's Investment Funds Technical Advisory Committee, advising on industry challenges and opportunities. Today, we'll discuss David's journey into real estate and mortgage financing, explore his perspective on the current market and what would be needed for a comeback, delve into how mortgage investing works and its unique appeal, and look at, of course, Morrison Financial's impressive track record and future vision. Without further ado, let's welcome my guest, David. David, we're very pleased to have you on the show today. How are you?
Very good. Thank you for having me.
Very pleased to have you with us. Now, David, your journey from a lawyer to founding a specialized lending company in 1987 is quite remarkable. So let's really start with your origin story. Tell us what drew you to real estate and mortgage financing for builders, and how does financing developers differ from end users in terms of risk and return?
Well, that's a lot of question, but originally, actually, I didn't start in that field. I started in commercial lending. I was lending to small and medium-sized businesses using the asset-based model. I found after a period of time that I wanted to diversify a little bit because it was difficult to build a large portfolio, but it happened in a very sort of indirect way. At one point in time, I was asked to finance a loan to a condominium corporation. We had never done that before. They needed to do major repairs to their building, and they did not have the money in reserve to be able to do that. Nobody had ever done it before in Canada. I was under pressure to do it because the person who wanted me to do it was pressuring me to sort of look at it. I went home, took the Condominium Act as a lawyer, read it, and became fascinated with that area. And we ended up doing that loan. But in relation to that, I had to look for a specialized treasury source, and I ended up establishing a relationship with a trust company. And over several years, the CEO of that trust company approached us, and in 1995, we went into mortgage lending, focusing specifically on builders and developers. So it was really because of the support of that treasury source that we ended up going there. And over time, we focused on that more and more because it became easier to layer transactions on top of each other and build a larger portfolio.
That's a very clear distinction, David, and it's clear that your career was built on identifying and serving a crucial niche in the real estate market. Now let's kind of explore your perspective on the current real estate market and what would be needed for a comeback. Because, David, the real estate market currently is on the minds of many Canadians right now, and as a specialized leader, you have a front row seat to the market's dynamics. So please tell us, what is your perspective on the current real estate market in Canada, and what would it take for the real estate market to truly come back and regain momentum, particularly for small and mid-sized market builders and developers that you serve?
So, what happened really is a combination of things. But you may remember a few years ago, interest rates went up. The government of Canada decided to do some fiscal management there and increased interest rates. But at the same time, because of COVID-19, the pandemic, and other factors, and now because of tariffs, there was a real spike in inflation. And what happened is that wages of the average person did not catch up with that inflation. So we have a situation today where nobody can afford anything. It's
Mm-hmm.
not that there's not demand in the sense of need. People need, they desire houses, but market demand is really when you have a need or a desire that's coupled with affordability. If somebody wants something but can't afford it, then they're not part of the market.
Right.
Okay, if they can afford it but don't want it, they're not part of the market. You need to couple those two things together. And so, what we need to see happen for the market to come back, in my view, is we need to see wages increased right across the board.
Mm-hmm.
Okay, so I read not too long ago that the pilots got a 30% increase, 10% over 3 years,
Right.
each year. I happen to know my wife's a doctor. We own a medical clinic. I happen to know that the doctors got some increases recently, a little more complicated than the pilots.
Mm-hmm.
The dock workers are on strike. They've been arbitrated back to work, or something like that is going on. Postal workers, something like that is going on. I read today that Air Canada flight attendants are going on
On
strike.
strike,
Okay.
yes.
And, these strikes may be disruptive, but what's going to happen is wages right across the board in all of these sectors will increase, and gradually people will be able to afford things, and you'll see the market come back. It's going to take 2, 3 years, in my view. It's not
Mm-hmm.
going to happen before then. And it's not all about interest rates. People talk about interest rates. Interest rates aren't so high.
Mm-hmm.
It's affordability, and we need the wages to catch up with inflation, as they always do. A good
Right.
wage, 50 years ago is not the same as a good wage today. We just need to have this constant inflation. It's something that I guess a capitalist economy requires.
Amazing. Those were amazing and very valuable insights, David. I mean, your perspective provides a very crucial understanding of the market conditions and factors that are influencing the real estate market and the real estate sector today. Um, Now let's discuss an intriguing topic for our audience, which is how mortgage investing works and what makes it attractive. Because David, Morrison Financial, it launched the senior and junior mortgage income funds in 2020, and this presents a unique opportunity for investors that are out there. Please tell us, how does mortgage investing work? What makes it attractive, and who should consider it for a steady passive income and strong risk-adjusted returns?
So you can give a loan to somebody,
Mm-hmm.
and if they don't pay it back, you got to chase them around. Maybe
Right.
you're going to take legal action, and you're going to try to enforce that legal action, but there's a lot of things that they can do to evade you. Okay. In the case of a business, it's possible to take security against the assets of the business under the Personal Property Security Act and various mechanisms that we have available in our legal system. Okay, and that enhances your ability to collect, because if the person doesn't pay and they just run away, you can seize those assets using legal process, and that will enable you to have a mechanism, something to sell that you can use to get your money back. I'm
Mm-hmm.
really sort of summarizing this, is more complicated than that.
Right.
Mortgage lending, real estate mortgage lending, is really the ultimate secured lending, because you've heard of a car lease or an equipment lease. A person could drive away with the car, even though you have security on it. You might not be able to find it.
Right.
Okay, it might be in on a boat going to Africa or something like that. That happens quite a bit. We read about that.
Mhm.
But the thing is, with real estate, it's part of God's green earth. The borrower can't move it. And so in real estate mortgage lending, you have a charge registered in the public system against the real estate. It can't move. You can drive by on a Sunday afternoon. You can look at it. It's always there to secure the repayment of your debt. And there's a process for that. But that's what makes it the ultimate secured lending. It makes it the most secure way in modern times of doing financing. I would even say historically, it's always been real estate mortgage lending. And generally speaking, the system works if it's done properly. Has
Mhm.
to be done properly.
Now, that's a very clear explanation, David, and it's evident that mortgage investing it offers a distinct value proposition for a certain type of investor. Listeners, if you are looking for an alternative investment opportunity to generate passive income, then please learn from our conversation with David today about how mortgage investing really works and what makes it so attractive and what to look for when building a diversified portfolio. Now let's continue our conversation with David. Let's take a quick break, and when we return, we'll explore the benefits of working with a specialized lender like Morrison Financial.
Hey, you think you know UPS? Yeah, that's us. Everybody knows that. You know what you didn't know? This. Okay, try to keep up. Ocean, us. Ground, rail, air, so us. Guess who? Us. Customs cleared, borders cleared, done. Us. You still with me? Wait for it. Boom. Us. Intelligent, automated, fulfillment. Us. Yep. Healthcare too. Digital your thing? Yeah. Well, book it, ship it, track it. You feeling me yet? Yep. That's all us. That's all UPS.
Welcome back, everyone. Now let's continue and discuss how a specialized lender like Morrison Financial can make a significant impact on both builders and investors. Now let's look at the specific advantages of specialized lender like Morrison Financial in this space. Because David, Morrison Financial has funded over 1.6 billion across its programs, and its expertise in underwriting is a key differentiator. Please tell us, what are the key benefits of partnering with a boutique leader like Morrison Financial for both builders seeking funding and investors in your mortgage funds?
So, in terms of builders and developers that are looking for financing, the Canadian banks, we basically have six major banks in Canada. They're very, very restrictive in who they will work with and under what terms they will work with. And some of them require that you have two or three projects under your belt that you've completed successfully. Others require that you have a certain amount of equity. Others put very high standards and conditions into their commitments. So it's not accessible to young and relatively new builders, or even builders that are smallish but have a lot of experience.
Mhm.
And, and so we are part of what we call the B lender market. The biggest companies, Cadillac Fairview and Tridel, they go to the banks, but anybody below that can come to us, even if it's tens of millions of dollars that are involved. And we service that market. There's about 8 companies across Southern Ontario that compete with us sort of directly in this market, but there's more than enough business for all of us. So we're not
Mhm.
really, really competing in that way. Now, when you're lending into this sector, you can often get a premium return over what you can get in the primary sector or in an ordinary retail mortgage, such as the banks are providing every day.
Right.
So we're able to charge a premium. And the reason we're able to charge a premium is because it's really twofold. First of all, the lower cost financing isn't available to our borrower. But generally speaking, the activity that our borrower is involved in is a very, very high value added activity.
Mhm.
So if you take a piece of land and it's just a raw piece of land, farmland or whatever, and you get it rezoned or approved, rezoned and approved for, let's say, a mid-rise condominium development or 147 townhouses, you're creating a lot of value. And if you have to borrow money to do that for a little while, and the money costs a little bit more than the conventional pricing, and I don't mean a lot more, it's a little bit more than the conventional pricing, that's a good deal because
Mhm.
you're going to use that money very aggressively to create good value. We operate at our company two mortgage income funds. These are mutual fund trusts where investors can purchase units. And through their investment, the money is collected, okay, into a group, into a fund, so to speak, uh, and then we run our mortgage portfolio with that money. The advantage for an investor of going that route is we bring all of the experience that's necessary, first of all, to originate deals, to source and originate deals, to implement them legally, and to manage them securely,
Mhm.
because it has to be done properly. These are active loans, especially once the construction starts. We bring all of that expertise, and what we do is we charge a management fee to the fund. It's a formula that we think is very fair, and our investors obviously think it's fair. But what that enables them to do is they can be golfing on a Sunday afternoon. They can be having a nap on
Mhm.
their living room sofa on a Sunday afternoon or Monday or Tuesday, whatever it is they want to do. They can be engaged in their other pursuits, their other businesses. It's a passive investment where they do not have to do the work, but they will access a piece of that premium return, which they can't get from a more passive investment such as a GIC or
Mhm.
something like that. So the idea is we're doing the work. You're getting a premium rate of return on your investment, and you're getting it passively while you're free to focus on other things or just relax.
That's amazing and such a great point, David. I mean, it highlights the value of specialized knowledge and personalized service in a market that can often be impersonal. Um, Finally, let's now reflect on your firm's impressive organic growth and your vision for its future. Because David, Morrison Financial has a remarkable track record, having funded over 1.6 billion across its various programs since its founding. Please tell us what has fueled Morrison Financial's growth over 35 plus years, and what's your long-term vision as you expand and engage investors through mortgage investing webinars?
Well, if you ask the question as what has fueled our growth over the years, I think it's the same thing with every other business. Some of them more so than ours, and some of them less so than ours. But basically, you have to have a product or service that provides value.
Right.
And whatever it is you're charging for it, it has to be worth more to the customer. Otherwise, he's not going to buy it. Okay.
Right.
And so we've consistently been able to do that. We've been able to provide a product or service to our builder developer community and the small businesses that we've worked with in the past, at a price that works for them. And so they keep coming back. Not necessarily the same ones, but they refer other people. The reputation gets out there. And we try to do it in a way that is respectful of the challenges that they're going through and is respectful of the fact that they have to come to us and open up the kimono and show us everything. Otherwise, we can't do the financing. The kimono is a metaphor. It's not literally. And,
Right.
uh, and the thing is that we try to do it in a way that's supportive and not just about the money, but so gives them ideas and supports them generally in that regard. I'm not sure if I remember the last part of the question or not. So
No, you did a
yeah.
wonderful job kind of telling us. But my last question was basically, as you expand, what is your long-term vision with all of this?
So you have to keep in mind, I don't know if I look it, but I'm 70 years old right now. Maybe
Right.
I look older. Okay,
You
I
look
don't know.
younger, I'll tell
Yeah,
you that.
yeah. So the point is that I'm not thinking right now in terms of long-term goals in the sense of 20 years or anything like that.
Mhm.
I've developed a lot of capital in my company that is invested in my company, and my main focus today is on developing a young generation of 30 something executives. And most of them are all in place right now,
Mhm.
not 100%. And I foster their development and their future growth in the business with the hope that they will take over the company. Some of them already have some equity in the company, and that just started relatively recently. And I plan to leave my money in the company into the next generation. We'll set up some sort of trust, but I look forward to these people growing
Mhm.
and learning and being able to take the company forward into the next generation. It's not, I don't intend to fully retire in the
Mhm.
sense that I just can't do it. I really like what I do. I don't.
Right.
I want to be busy. I'm not going to go sit on a beach. I'm not a
Yeah.
golfer. I do, have things that I like to do.
Mhm.
But this will enable me to continue to be involved, but really more in a chairmanship, sort of, high executive, non-executory role, and indefinitely until I no longer want to be.
Right.
And it'll foster the development of these young people because they'll have capital behind them and support, emotionally, intellectual, and experience, and a little bit of gray hair to bring to it. To the extent that the gray hair is still left, some of it's disappearing,
Right.
and so that's the plan. It's the
That's a
plan.
plan.
So
That's a very inspiring vision and a plan, David. And it's clear that your commitment to organic growth and specialized lending has been the key to your success. And we wish you all the best in your future endeavors as well. Now, this has been a great conversation, very enlightening one for sure. Great insights to our listeners. Now that we wrap up, David, if there's one key message that you'd like to share with our Canadian SMEs about building a lasting, successful business in financial services, what would that be?
I would say two things. First of all, if you're talking about building from the start, okay, I would say dive in. You cannot be an entrepreneur if you have to see the end.
Mm,
You have to have a concept of the end. You have to have an idea where you're going, but you cannot. You have to have the confidence that whatever obstacle you encounter, you will be able to overcome it. You will
right.
find a solution. There will be jogs in the road. You will move in different directions, but you can't necessarily see where you're going. You just have to have the confidence to go in. And then my advice would be to just keep going. You will have setbacks. My growth of my business was not a straight line, just like this.
Mm-hmm.
2% like every month or whatever. It was there were setbacks. There was positive. There was negative. There's still positive and negative, but you have to have the fortitude to just keep going and keep believing.
Mm-hmm.
And other than that, I would say be honest with the people who are supporting you and be transparent. If people see that you're working hard and that you're honest towards them, whether it be a financial institution, a lender, or some investor, they will support you. People do want to support you. The moment that they don't trust you, you've lost them
Right.
and you've lost their support, and you don't ever want to see that happen. So
Mm-hmm.
be honest with people, be transparent, and they will help you.
That's a powerful and a very actionable advice. Thank you so much, David, for being on the show with us and for sharing such great expertise and your experiences. Thank you.
Good. Thank you.
And that was an insightful conversation with David Morrison, the president and CEO of Morrison Financial, on his entrepreneurial journey, the current real estate market, mortgage investing, and the future of specialized lending. Thank you so much for tuning into the podcast. We really appreciate your continued support. Please be sure to subscribe to our podcast for more expert insights and resources that can help your business thrive. You can also visit our website, CanadianSME.ca, for valuable information and tools. A special shout out to our partners RBC UPS, Avon Global College, ADP, and Google for their ongoing commitment to empowering small businesses in Canada. Until next time, please keep innovating and striving for success. We'll see you in the next episode.